Gold is literally the only commodity out there that you can multiply its price overnight and it won't affect any industry. It won't upset any apple carts. Jewelry, they'll just switch to, they'll just lower the carat weight or raise the price or use other metals. But other than that, there's no industry where the price of gold has a significant impact on the end price of the product because it's unique in all of its properties. So that's why it's the perfect money and has been throughout human history.
This is Little by Little with Andy Schechtman.
All right, welcome back, everybody, to another episode of Little by Little. I'm very excited to have Brien Lundin with me here, not only the author of the Gold Newsletter, but the proprietor of the New Orleans Investment Conference. It's the granddaddy of the conferences, and one that I attended a couple years in a row before COVID and haven't found my way back, although that is something that I plan on doing hopefully next year. Brien, thanks for coming, man. I appreciate you dropping in. How you doing?
I'm doing great. I'm a gold bug, so how could I not be doing great with gold over $3,000?
Yeah, it's interesting. I was working out this morning and I was on the end of my workout. I get on the elliptical machine and I'm right in front of CNBC, and they have a ticker that scrolls by. Then they have this thing underneath it that spins, and each time it spins, it would be another indice, the Dow, the S&P, the NASDAQ, the Nikkei, whatever. And I started watching and following, and I'm like, well, this doesn't look right. And I'm seeing it, gold comes up, and it shows it at $3,040 whatever dollars. It took 44 spins to see gold come back up. But in that time, Bitcoin or Bitcoin futures popped up 7 times. Yeah. So 7 to 1. And I'm thinking gold's at all-time highs at over $3,000. There's really not any fanfare at all on CNBC. It just makes me, think that there are very well-read people out there reading the wrong stuff, being misdirected, completely ignoring this. And we'll talk a little bit about that. Maybe you can answer that in this first question, as I want to respect your time here. As I mentioned, your conference is the granddaddy of conferences, and it's known, especially in our circles, the metal circle. So how has that conference evolved over the years? And for someone who hasn't attended, or someone like me who needs to come back, what would you say are the biggest reasons that they should come to next year's New Orleans Investment Conference?
Yeah, I think it really builds off of your first comments. I think that's a very smart observation, and it really does kind of reflect on the history of our event. The guy who started everything I do was Jim Blanchard, who was an icon in the hard money movement, the original gold bug, as it were. And he decided when Nixon closed the gold window to advocate to return the right of gold ownership. He kind of foresaw that this would allow central bankers to print without restraint, and saw that the inflationary consequences, but American citizens couldn't own gold and protect themselves from that. So he set about that. He started Gold Newsletter as his primary tool in lobbying for the return of right of gold ownership, was successful in that. In 1974, decided to have a conference to teach Americans how to invest in gold. So we had the first conference in 1974. We just celebrated our 50th anniversary last year. And back then, gold bugs, hard money people were really way out of the mainstream and predicting crazy things that then happened. But then there was that long winter of depressed gold prices, and the gold bugs were still saying, everything's going to hell in a handbasket. Look at all this debt we have, yada, yada, and look at these trends. And they, mainstream Wall Street put tinfoil hats on them and deemed them crazy. And that, I think, persists to today, that's why Bitcoin has more respectability than something that's been around for 4,000 years, because of, that reputation that gold bugs have had for crying wolf. Well, the wolf is here, and for real. this time. And what's happened is that there's been a number, just like there were in the 70s and the 60s, there was an alternative media through these newsletters, really brilliant people talking about how crazy things were and we're going to get. And now I think there's another alternative media and social media and the like, primarily Twitter X, where there's a lot of really smart people out there who are also rising to the fore and explaining these extraordinary times that the mainstream media like CNBC are still ignoring. None of the crap we're seeing right now is normal. And they're pointing this out. And so our conference has evolved from those early days through that kind of nuclear winter of gold prices. And over the last 10 years or so, I've been focused on bringing, not so much focusing on the political angles as much as we used to, but bringing those really brilliant thinkers to the fore to explain these times that we are in. And they've been doing an incredible job. We've got hundreds and hundreds and hundreds of really smart investors who come to New Orleans, get to meet and hang out with these people that they see online that and doing podcasts and the like that are explaining what's going on these days, and they're able to meet with them, asking their own questions, etc. It's just an incredible atmosphere. There's an intellectual energy that kind of permeates everything at the event. And you just have to experience it to really understand it. And that's why I encourage people to come this year and in any time. If you look at our speaker roster, you'll see that it's really unsurpassed by any other event out there. I really focus on the people that I know after all these years in the business who are really smart, have just fantastic insights, and really, especially at this point in the cycle and the markets, really need to be listened to.
Yeah, we'll put a link to your website for the conference there, and hopefully I can find my way back there again this year. I always speak at Rick Rule's conference. It's in my backyard here in Boca Raton, makes it a little bit easier. But that's not an excuse. I stopped really doing the conferences for a few years during the pandemic, but I think it's time to get back, especially when you frame it that way. I've been doing this for 35 years, and I have tinfoil hats in all sizes as I've grown up. And honestly, it blows me away, Brien. If you would have told me, man, that gold would be over $3,000 at all-time highs and is more or less completely ignored by the mainstream, I just would have said, well, geez, that's impossible. It's crazy. And you're right. There are a lot of well-read people reading the wrong stuff, and we need to get more people to conferences like yours to open their eyes to alternatives, realizing that the road to retirement isn't always solely paved with mutual funds and stock certificates. So I give you a lot of credit for hanging on, continuing the legacy of Mr. Blanchard, and continuing to do such a fine show. And so thank you for that from the entire industry. So let's shift gears just a little bit here. I did an interview yesterday with Steve Hanke, and this guy's got a resume a mile long. I mean, it's the most impressive resume I have ever seen.
Yeah.
Yeah. And, and now he's teaching economics, applied economics at Johns Hopkins. And he more or less feels that inflation is a function of monetary policy, in particular money printing, that happened a year or two previous, and that we've gone to quantitative tightening over the last year or so that inflation is going to come down, and he believes will be under control. And then there are others like Peter Schiff who says, no, we haven't begun to see where inflation is going to go. I always think it's important to weigh both sides of any coin. Right. In fact, there's even a third side, the edge. Some argue inflation is under control, like Steve. Others believe it's just getting started, like Peter. With the Fed balancing this inflation economic slowdown balancing act, U.S. debt and interest payments reaching record levels, where do you see things going? Is there a viable path forward, or are we inevitably heading towards some sort of financial reckoning / reset / massive correction? I know that's a lot to throw at you, but this inflation and economic market balancing act, where do you think we are right now?
Yeah, and I agree. It's important to listen to both sides of the story. That's why we don't try to have some kind of a consensus theme for our events. We bring smart people. They sometimes disagree, and there are smart people in the audience that can make up their own minds and should make up their own minds. I can see both sides of the story, but let me tell you where I think that Steve, I agree is absolutely brilliant, may be wrong. Gold and the bond market are all investment markets are predictive mechanisms to some degree. They look to the future and try and discount that future in current prices. But gold and bonds, I think, are the most sensitive markets out there. And gold right now is predicting something. We had that a couple of years ago. We had that, I guess it is a couple of years now. We had the spike, maybe a year and a half. We had the spike in inflation over 9%. And on CNBC and all the mainstream media, they were talking about how gold was not reacting to inflation. It wasn't an inflation hedge. Well, gold had already reacted to it. It had doubled in price after COVID because gold saw what was going to happen, the repercussions of that extraordinary monetary response. And right now, gold is telling us, and Alan Greenspan was a big believer in this. This is why he helped try to keep the gold price suppressed in the 1990s, because of the inflation expectations that a rising gold price generates. So gold right now is telling us something. I don't think we know what it is. I think something's probably going to come out of left field that nobody's really expecting on top of everything else. But at bottom, gold is telling us that the purchasing power of our currencies is going to be lowered significantly at a much faster rate in the future. And that's the real reason to invest in gold, or to hold gold as insurance, to lock in the current purchasing power of your currency. Whatever you put into gold right now, you're locking in that purchasing power against what is going to happen, your depreciation of your currency. And that's why I think a lot of money is going into gold right now. We have not seen Western investors participate in this to any great degree. Starting to turn a little bit now, pretty late to the game, but I would argue that the vast, vast majority of all the demand over the past year in this big rally in gold has been fear-based, insurance-based buying, and not investment-based, greed-based buying. That's the element that's been missing. And that fear-based buying will continue. The salient feature of that is it's fairly price insensitive. They don't care what the insurance premium is as long as they're covered to some degree. So that buying will continue. And if and when we get that greed-based buying, which I think is going to come now that gold is outperforming stock market, all of the tech stocks, Bitcoin, and everything else that has robbed that market of the speculative demand, that's all turned in this quarter. And once the quarter end comes and those performance numbers are up there, you're going to see a lot of investment money coming into gold.
Yeah, I love your answer. And I've never seen a market that went from risk on to risk off quite as fast as this one has. I mean, and you're right, as someone who owns a metals company, for almost a year, you had this massive risk on movement away from things like gold into things like NVIDIA and Bitcoin and Apple. And now we see the hedge funds having their lowest exposure to the Mag 7 in over 2 years. Certainly, I agree with that. And then you had the Trump euphoria. You had the 2025 allocations come out where dealers like myself spend $30 million on buying all of the coins from the 6 major mints in various sizes and silver and platinum. And so premium sunk and demand was very low, and it's really just flipping very quickly. I agree with you. And we're going to talk about what that white black swan might be, that unexpected event that you mentioned, in one moment. And I love your answer there. Thank you for that. And I agree with you, by the way. But first I want to ask you one last question as it pertains to alternatives. As someone like yourself who understands gold in the proper context, you don't buy it to become wealthy. I think you own it because it is wealth. So certainly if you own enough of it, you'd be wealthy, but that's not why you own it, I think. I think you own it, like you said, insurance, wealth. It's been wealth through 2 world wars, German hyperinflation, the Great Depression, every pandemic, it's still wealth. And the central banks are still buying it. And fear is a far stronger motivational factor than greed. All of this I agree with. But yet, it still seems by many to be viewed as that archaic pet rock as it pertains to Bitcoin. So just humor me for one moment and let me know, what is your view of Bitcoin and its role in the financial system? Do you view it as a competitor to gold, as some do? Do you view it as a complement, or do you view it as something completely different?
Yeah, I think Bitcoin, its role versus gold is, it's obviously not a store of value yet. Yes, it is a competitor to gold, but only in terms of speculative demand. It has robbed gold of that speculative demand that we would have had very much earlier in the cycle. This would have been typical, and if Bitcoin wasn't around. I think that as much as many smart people who are friends of mine that I really respect, as much as they are convinced, I don't think that anyone really knows what Bitcoin will become. Its speculative aspect, its speculative attraction is based on an eventual use case that I think has a lot of flaws in that case that need to be overcome. Not saying that they can't be overcome, and I'm not saying that it won't eventually have that use case, but right now it is what it is, and you can't look at that market, you can't look at Bitcoin and say that it is currently anything but a speculative vehicle. It is a tech stock, and a tech stock of the most speculative kind, in that it's like a before revenue tech play, and that's shown every day in trading. It is not a store of value yet. So I think that Bitcoin has robbed gold of speculative demand, but I don't think anybody is buying Bitcoin right now as insurance. The Bitcoin maxis that are promoting it, and they always promote it by saying, not that this will solve all of your problems in life and get the government out from under you, which were the original motivations and aren't anymore. But they're talking about it in terms of price. And I think that belies their underlying view of it. They're pricing it in dollars. And, the true gold bugs out there don't price gold in dollars. They price the dollar in gold, which is the proper way of looking at it. So yeah, my speculative investments are in mining stocks, typically, that build on the macro argument that I see in place for gold and silver and the monetary metals. But my insurance money is going to, insuring my home against fire and natural disasters, and gold and silver insuring my wealth against something I know is going to happen. Although I'm in South Louisiana, so I do know that natural disasters are going to happen. But
Yes, you do. You
but
do.
not with the certainty that I know that the dollar will further depreciate, and I think at a more rapid pace. Though that's what I'm really insuring against.
And again, I really appreciate your candor, Brien, and much like you, being objective and open-minded is something I've always tried to do, and I try to unite the two communities best I can, because I think, to your point, the Bitcoin people, I've never heard them talk about preservation. It's always growth, and most of the people in the 35 years that I've owned Miles Franklin, never are we selling it based on profit. We sell it because it's wealth. And yes, silver offers that type of potential. And I'd be lying if I said I wasn't aware of the profit potential. But that's not why the people who contact me typically are buying gold. And I've tried to unite the two communities because, and for quite some time, I had a gentleman named Andy Hoffman who worked for me a long time ago, who focused on, he said, let's bring these two communities together. And I said, that's a hell of an idea. We're all understanding the inherent problems with the system. Although when we walk in the door, one goes this way, one goes that way. One is preserve, one is profit. But we should unite the two communities. We should be complementary to one another, not divisive and at each other's throats. I brought Natalie Brunell on my show the other day, and I had to put a letter up there defending her and her right to to her beliefs. And I said, look, if we don't learn other angles, we don't grow. And whether or not we agree, we should listen to other people. And the gold bugs are certainly very adamant about their position. I think we should all lighten up a little bit and listen to other people's viewpoints, because, we're a stronger community when we're all pulling the same wagon. Just my 2 cents on it. But for what you said, I completely agree. Bitcoin is speculative, and I own maybe 3/4 of one Bitcoin just to have my toe dipped in the water, to say that I didn't let it slide by me. But I own a gold company, and I've been buying gold every 2 weeks for 35 years, which, by the way, was the best gift my father ever gave me. Made me do that every 2 weeks, or he said he'd fire me. Buy either some silver or some gold. I don't care if it's 1 ounce. It's been 35 years I've done that, learning the laws of compounding, and that's for another discussion. But the best advice my father ever gave me. So for all you gold bugs out there, I'm a gold bug, but we should listen to what other people have to say, especially someone as fantastic as Natalie. I am going to ask you about mining shares at the end. I got a couple questions on physical gold to ask you. So it's very obvious, and for 4 years we've been talking a lot about the central banks buying gold. That we know. But what is new is the United States has become a net importer of gold since November, since Trump won the election. Something I've never seen before, at least to my recollection. Inventories are rising at massive levels on the COMEX, while outflows are turning the LBMA from a T+1 settlement to T+8 weeks. So that's a problem. And they say, well, it's a logistics issue, not enough trucks or manpower. Don't believe that. The LBMA released their last vault data the other day and showed that 128.5 million ounces of silver were withdrawn from the London silver vaults over 3 months through February of this year. That's 42% of their float. Over 65 million ounces of gold have been delivered to U.S. vaults over the last 12 weeks. So the global market is really grasping and gasping for physical gold. And when you look at the LBMA, they have 370 million ounces of London spot gold promissory notes that is being backed by 36 million ounces of gold, their float, 10 times. Same thing in silver. In silver, we see roughly 270 million ounces of silver. That is the float, yet they're trading upwards ends of 2.9 billion ounces per day, 11 or 12 times. That's 3.5 times annual global mine supply. So this rehypothecated, over-leveraged paper system seems to be something weird is happening. Something very big is happening with all the gold coming in, gold being the only tier 1 asset next to treasuries, and the LBMA being bled dry. All of this stuff happening shotgun. And some say it's Trump tariffs. Some say it's Basel III, which goes into effect July 1st in the U.S. Some say it's the taking advantage of the arbitrage between the London price and the New York price. Buy in London, sell in New York. I don't believe any of those. I think there's a little bit of truth in all three of those. My question to you, with the mainstream sleeping on gold, with the U.S. now a net importer, all this stuff happening, what's your gut telling you about gold right now?
Yeah, I completely agree with you, Andy. I have some friends in the physical gold and silver trading markets that have convinced me that the tariffs did have some role to play in it. I've looked into Basel III and that July 1st deadline, and I think that has some validity. I think that the big bullion banks are being forced now to some degree to report their precious metal derivative holdings, which the derivatives won't count against Basel III, but I think that's the distinguishing factor that needs to be reported. You don't own gold if you own it this way. So I think that reporting is exposing a lot of the games that have been played. Not so much that these bullion banks and banks need to hold physical unallocated gold on their balance sheets, but they need to prove that that gold they're showing in their balance sheets is really gold and not just these paper derivatives. So that's a part of it. But I think a large part of it goes back to what we were reporting on in Gold Newsletter in the late 1990s. And in fact, we're really just a conduit for the great work of Frank Veneroso back then, who was the first to really expose what was going on. We published the Gold Book in 1998. which was a compilation of Frank's work, which was very detailed, very complicated. I can tell you that I spent many late nights editing that work. So it was it was remarkable in so many ways, but it exposed and explained the mechanics of what was going on then, that these central banks, perhaps the Fed and the Treasury as well in the U.S., but central banks around the world were loaning their gold out, not selling it, but loaning it to these bullion banks, which then immediately sold the gold on the market, replaced that gold with IOUs to the banks, bought treasuries with the funds, then used the treasuries as collateral for their tech stock bets and everything else. So the gold may be in the vaults, but it's technically owned by somebody else, or it's encumbered in some way, or it may not be in the vaults and it has to be moved back. So broadly speaking, I think some of what we're seeing, and perhaps most of what we're seeing, is the fact that there's a lot of metal, gold and silver, that's trying to get back where it was supposed to have been all along. And, you look at the Trump administration and what they're doing, I think it is shaking the global establishment by its very, to the foundations. There's bulls running through the many China shops right now and exposing, JFK files coming out. The Epstein files coming out. Everything's being exposed from the establishment and the deep state. So I think there's a feeling that this is going to be the next shoe to drop. And you look at the calls for the audits of Fort Knox, et cetera. I think that the fact that so much gold is moving around the world, moving to the U.S., and importantly, moving from London to Switzerland to get put in good delivery bar form, then coming to the U.S., or vice versa, and going to COMEX to be in kilogram bars. Everything's trying to get back where it's supposed to have been, and I think that's a big part of what's going on. And again, I don't think it's any one thing. I think it's a big, varied gumbo of a lot of different ingredients that are coming to the fore right at the same time, and people are panicking and they're moving gold around and buying gold.
Yeah, and I'm going to add a little bit of gumbo to the gumbo in a moment. But over the weekend, we saw the COMEX delist several of the LBMA futures contracts in gold, and a lot of people I respect, Craig Hemke, I think, is a genius, and he doesn't think it's that big of a deal that these were the contracts that had low volume. I think it is a bigger deal than people think. It's signaling a separation, if you will, between COMEX and London. They're distancing themselves from, I think, a perception that they're not able to deliver what they have obligations to do. We'll see how this all plays out. Just a little bit of spice to the gumbo. I interviewed Judy Shelton not too long ago. She's an amazing lady.
She's wonderful.
And she was Trump's nominee to run the Fed in 2016, of course, with partisan politics being what they were back then. And for the last several years, she wasn't confirmed. Some say she might take over for Powell when his tenure is up here next year. She advocates, as you know, for issuing treasuries collared by gold and redeemable in gold, 50-year. And then in her book, she talks about shorter duration treasuries also. She told me she would then ascribe to having stable coins issued on the back of these treasuries to further support the treasury market. She talks about the fact that she's had many conversations with President Trump and believes that he will issue gold-backed U.S. treasuries in an environment where net since 2014, central banks have not been buyers of even one U.S. Treasury net. They've been more sellers than buyers. And in many cases, exchanging treasuries for gold, which has no counterparty risk, is a tier one asset like treasuries. And in a world of sanctions and weaponization of the treasury market, it makes sense. Now, Judy says she believes on July 4th, 2026, next year, that he will issue these. Because that's the 250th year anniversary. She said that on my podcast. She believes that's what he will do. And if you think about it, from reshoring, the only other tier one asset, from bringing all of this back, separating yourself from this rehypothecated situation in London, maybe this is the path they're taking. regardless of if this is or not, you would certainly have to bring all the gold back first. A lot of people are talking about revaluing gold, where every $4,000 increase in the price of gold would give the Treasury general account $1 trillion free and clear. Even James Rickards was citing a number. I don't remember if it was 12,000 or 24,000, but I did a little math myself, and I took the money supply, took 40% of that. The U.S. was 40% gold back. At one point, it was 100, but moved to 40. The Swiss were 40% gold back. The BRICS nations, Delma Rousseff said, well, we've agreed in principle to a new settlement currency. He said that a few months ago, called the unit, 40% gold back, deliverable to central banks on demand. James took 40%, divided M1, I think he used, and divided the amount of gold, which hasn't been audited since 53, into it, and he came up with this big number. I took the money supply, the broadest measure I could find, and divided, I took 40% of that and divided the gold into it, and I came up with over 12,000, which would give the Treasury General account $3 trillion free and clear. I don't know, maybe Judy is onto something. Maybe this is what they will do. I guess we'll see. My question to you in such a roundabout way is, do you think that we will see gold at some point? Do you think this is maybe a precursor to gold being reintroduced into the monetary system, perhaps backing treasuries, as Judy said? Is that something that I never thought I'd see in my career? And here it is right in front of us. Is that a possibility in your mind?
Well, I think it's an inevitability. I don't think anybody can really predict the precise path that it's going to go on. But my big thesis over the last 10 years of all my speeches and presentations have been that we have been on, back then when I first started talking about it, a 35-year, now it's a 45-year trend of ever easier money. When Volcker started lowering rates in 1980, after he killed off inflation, the reaction by the Fed to every slowdown in the economy has been to lower rates, and they were never able to raise it back to even the midpoint of the previous cycle. So if you look at that, and I show the chart in all my presentations, you look at the bottoms of the interest rates over time, it's a steady stair step down to zero. And at the same time, I plot the price, or actually the federal debt, and it's ever rising while that's falling. So ever lower interest rates encourage ever greater debts. We've reached, I think, the end game of that process, where debt loads are so great that we can't have normalized interest rates. They just collapse the whole house of cards because you can't service the debts at normal interest rates. So interest rates have to be lower than the rate of inflation, the rate of currency depreciation, or everything falls apart. That's untenable. At some point, things have to be reorganized. And with every cycle, every crisis that this ever easier money creates, every bubble that gets blown up and then gets popped, the Fed and all of the other central banks have to come in with ever greater emergency efforts, because the markets and investors and the economy have become addicted to ever easier money. They need more of the drug each time to get the same effect. Eventually, that robs fiat currencies of their credibility. And the only way to restore that credibility, in my mind, is to reestablish a gold connection. Now, as far as Trump, Judy is absolutely brilliant. I had her at my conference about 6 or 7 years ago. She's a remarkable economist and again, absolutely brilliant. If anybody can do that, it would be Trump. But the other side of that coin is that would establish or lend strength to the dollar, and Trump's not really a strong dollar guy. He wants low interest rates and a weaker dollar. He's more of a mercantilist. So that argues against that. But I can certainly see that happening. Again, I don't think anybody can predict the precise path ahead. But in some ways, gold will have to be reestablished with some connection to the dollar. And interestingly, and this is something not very many people appreciate, gold is literally the only commodity out there that you can multiply its price overnight and it won't affect any industry. It won't upset any apple carts. Jewelry, they'll just switch to, they'll just lower the carat weight or raise the price or use other metals. But other than that, there's no industry where the price of gold has a significant impact on the end price of the product, because it's unique in all of its properties. So that's why it's the perfect money and has been throughout human history.
You have no idea how much I love that you just said that, man. And I only wish I would have talked to you a long time ago, because I've been talking about this stuff ad nauseum for a long time. And you just gave me something that I will give you credit for at least 1,000 times as I use that very phrase.
Can you give me a quarter every time you use it?
It makes a lot of sense. Silver, you double it or triple it, you've really hurt, even though it's inelastic, perhaps you've hurt some manufacturing capacity. But I love that. And that's very, very true. And couldn't agree with you more. Again, your take on this is fantastic. So I know you're in a hurry, so I'm going to ask you the last two questions in one and go back to your fantastic show, the New Orleans Investment Conference, because I know it's not all just physical metal. And so I'm going to ask you about mining shares. You had mentioned, I've always looked at the Swiss, the way that they envision their financial period, and the top 10% for me has been mining shares, and I've owned mining shares for a very long time, and they've underperformed, and they've been very, I'd say counterintuitive to certainly gold and silver's run, especially gold's run. So I'm going to ask you two questions in one, and then you'll tell us how people can find out more about what you do in your show and whatnot. And that is this: are the miners a good value right now? I think they are. I'm curious to hear what you have to say. And then, what is the most common mistake that retail investors make when buying mining shares, and a way to avoid it? And then I'll let you run. I know you're in a hurry.
You will be unsurprised to learn that I also agree that mining stocks are a value right now and a good investment. But I'll go further than that, and I'll tell you that I believe they are a generational investment. The last time mining stocks were selling at these levels, not relation to gold, but just, based on price to NAV and everything else, was the early 2000s, really around 2000, when both gold and the mining stock markets were completely bombed out. And over the next decade, we saw the mining stocks go up, really truly leverage gold. Gold went up, I think about 7 or 8 times in value. But the mining stocks, we saw a period where a junior mining stock might go up 4 times in price, and you would take the money from that, put it in another one that would go up 5 times, and another one you'd go up and it might go up 10 times. And it was a tremendous period of wealth creation, a period when your losers just doubled in price. The gold price rose. So that was a tremendous period, very profitable period, very rewarding. But in 2000, you would have to be very courageous, if not crazy, to believe that gold was going to go to the heights, go over $1,000 like it eventually did. Today, we have a situation where gold is already at record levels and headed higher, yet the mining stocks are still priced as if the move hasn't happened at all. And the reason for that goes back to what we discussed earlier, that, the gold buying has been for insurance purposes so far, largely by central banks, and they don't buy mining stocks. So we haven't had that speculative demand in gold. When this quarter ends and they look at the performance of gold versus everything else, these hedge funds, these institutions are going to say, well, did we miss the investment move in gold? How can we get involved? Well, let's look at this undervalued mining stock area. So I think there's going to be a big turn coming. I think it has to come. I think this is the year when it does happen. But the opportunity right now is that these mining stocks are still at very low levels. The big mistake I think that investors make is they don't educate themselves on this sector. The bad thing about it is that it takes some education to really successfully invest in the area. The good thing about it is that it takes some education because it's in an inefficient market. if you subscribe to the best newsletters, if you go to the best conferences, talk to the right people, talk to Rick Rule, subscribe to letters like Gold Newsletter and a number of other good ones out there, you learn about the market and you can figure out the best opportunities that typically get left behind or temporarily ignored in the market. And you can take advantage of that inefficiency. We have a free report on our website called Investor's Guide to Gold and Silver. It has all of the best ways to invest in the metals and mining stocks and every way to invest across the spectrum from physical to the equities. And it lists the best newsletters out there, in my opinion, the best conferences to go to. You'll be unsurprised to see any of the people and the events listed there. But it's important to do that, to educate yourself, because there's risk and there's opportunity in equal measure. Actually, I think right now the opportunity outweighs the risk at these price levels, but the window is closing, and I think there's an urgency to that as well.
Yeah, we call that asymmetrical risk reward, low downside, high upside. I would agree with you. The mining shares have lagged tremendously. I've really enjoyed this. You are a smart man and very succinct in your take, very well thought out and measured. I appreciate your candor. I appreciate your time. And I will come back next year. You know, the two conferences that I've gone to since the pandemic have been Rick's and Jay Martin's Vancouver Resource Investment Conference, both great. And I think it's time for me to come back, if you'll have me, to New Orleans. And I think you've convinced me this is the time, no question about it. So I appreciate that. And we'll make some links on the bottom of this to your show. What is the best way for people to follow you, whether it be on social media, finding out more about your show, or your fantastic newsletter?
Yeah, goldnewsletter.com, neworleansconference.com, and you can follow me on X, Brien_Lundin on X/Twitter. I post some thoughts, good, bad, but they're free and worth every penny on social media. And I look for something in your inbox very shortly, because we will get you back to New Orleans. It is, again, it's unique, it's exceptional, and I know I'm talking my own book, but ask anybody who's ever been there. It is the place to be, especially in a market like this.
No, I think running a good business and doing the right thing don't have to be mutually exclusive. So
Right.
Talking your book is not something that ever resonates with me. You're one of the good guys in this industry, and I appreciate all you've done for it and continue to do for it in what has been a tough road to hoe for a while. And looks like our time is upon us. Anyways, Brien, I wish you very well, brother. I thank you for sending me that email, and I look forward to picking up with you where we left off, hopefully not too far down the road, but until then, I'll be looking very forward to it.
Thank you, Andy. Really appreciate the opportunity.
You got it, man.
Little by Little with Andy Schechtman.